Hey traders, checking in on the stock market today. Headlines of Musk buying Twitter stealing the attention for the most part, but we had bounces underway, still tons of correlation among many things, markets and commodities alike. We'll check it all out as we head into tech earnings. So looking at the S&P 500, we've got a bullish reversal candle on the daily time frame, a nice hammer. And again, we're seeing correlations very significantly linking up. So for the last few weeks, we had healthcare and energy going up and tech going down and commodities going up and semiconductors going down, and it was all over the place. And since Thursday, everything dropped in unison. Thursday and Friday, everything dropping. Sunday when futures open, everything drops. Commodities dropping, all sectors dropping. And now on the bounce today that is just starting, potentially, we'll see how much follow through we get, but it was the same thing. So I can go and look at the gold miners daily candle, or the uranium plays daily candle, or healthcare, or whoever. It's very similar to SPY's current candle. So that will change. Again, this is the market environment where we recognize correlations, we recognize correlation shifting because it is constantly shifting, and we will see individual sectors start to do their own things eventually. But for now, we are very correlated. So a couple big fundamental events. We know big tech sector earnings this week. We've got Google, Facebook, Amazon, maybe Amazon, I forget. There's a bunch of them. So a big chunk, Microsoft, etc. And we're going to be watching, just saw my first hummingbird of the spring. We're going to be watching the reaction to that. And then we've got the FOMC reaction on a week from this Wednesday. So for me personally, I am in a slowdown environment. Not only with what the broader market is doing, but knowing that there's all these fundamental events coming, I am personally in a day trading mindset. And even with the day trading, I'm just pumping the brakes a little bit, as I've talked about recently, with recognizing shifting market environments and things like that. So today was a day I had no flow state, and I was able to recognize that fairly early on. So normally I'm looking to buy dips aggressively, but we did not have a setup that favored aggressive dip buying. What I want to see for my trading style is a gap down open with bears in absolute complete control, with a ton of weakness right into the open or right after the open before a bounce gets going. But we had a pre-market bounce. So I loved where the hourly RSI was on the S&P 500 to close last week. Where was that back here? But again, by the time the market opened, this happened. Look at the hourly RSI. Hourly RSI down at 15, 14. Absolutely. Let's go. Let's get a bounce. This morning, it cooled all the way off to no longer be oversold by the time the bell rang. So it's a much different setup for me. We confirmed a bear flag with no follow through, and then the bounce got underway. And so I headed into today saying, all right, it's not my ideal bounce scenario, so I'm not going to be aggressively looking for a bounce. I'm not comfortable looking bearish because I know we're crushed on a lot of these drops the last couple of days. I'm much more comfortable looking bearish after a daily bounce takes place, and I will then scout daily lower highs because, as we can see, a bunch of individual names and sectors have a lot of space for a daily lower high to be the result of any bounce from here. So I know that heading into the morning, so I don't have an edge. I don't have an edge on looking for direction. Many mornings, I have an edge of what I feel is the most likely scenario of direction that I should be looking. And then once I determine the direction, I determine, do I want to be aggressive or conservative, which determines the time frame that I'm focused on. And then I zoom in and focus on my individual name or individual sector. This morning, didn't have that. So I just patiently waited around, and eventually we got to midday. And because the S&P 500 hit a new low of the day here and saw some weakness, 11:30 to 12 o'clock, and QQQ and the NASDAQ here did not. We did not hit a new low of the day. We double bottomed. So I took that as a first little bullish clue. And there was another bullish clue with QQQ morning equilibrium. This was a very high volume morning. It's unusual to have a very high volume morning within a tightening range. If you tell me it's a really high morning, I would say, well, then it's a trending morning, whether bull or bear, trending with follow through. But to be in a tightening range with high volume, and knowing that it's the bears that have been on top, for me, that's a little point in favor of the bulls. Why? Because if the S&P, again, we're coming from a fear environment with complete bear control. And if the S&P 500 hits a fresh low, and I'm overlapping two different times. S&P 500 fresh low was back here, but it did it as well on the morning. So low of the day, we were dropping to the low of the day on SPY all morning, and QQQ was not. It was tightening up. So I'm saying to myself, okay, bears should be confident. If bears are going to remain confident, we should easily drop to a lower low with SPY. But a high volume equilibrium shows me, in my opinion, the scales tilting from supply outweighing demand, bears in complete control Thursday, Friday, and overnight into the open today. And then that shows me the volume is doing this, and the scales are starting to level out because there is bull volume absorbing things, and we didn't hit a new low when the S&P 500 did. So that gave me a little bit of a bull lean. Okay, so what do I do with that bull lean? Well, I scout a bullish entry. And so what I did was I saw this key resistance. I saw a 15-minute tightening range. I said, if we reject from this resistance and pull back on the 5-minute time frame, I'm going to buy that resistance break, looking for the hourly bounce to then see some follow through. So we got that bull break. I bought the break. I sold a third very quick so I could get some breathing room with where my break even price is going to be. And then I stopped out very quickly after when this 5-minute higher low was lost. Where was it? This little 5-minute higher low. So bull break, I'm in, exit a third real quick, stop out. Because if we lose the 5-minute higher low, we're not going to see any follow through. We then chopped around a little bit, and the bull move I was looking for then happened at the end of the day. But again, at that point, just clearly saying to myself, nope, don't have it today. And that is perfectly fine. Sometimes that'll happen in basketball. Sometimes it'll happen in ping pong, where it's just clear, don't have my shot today. And the next day I can have it very easily. So it's important to pump the brakes when we don't have it, pump the gas when we have it. So bounce underway. Hourly trend changes to the bulls are needed to prove some bounce follow through. So just looking at SPY, low of the day into the close at the high of the day. Nice bounce. We've got space, but we know we need an hourly higher low and higher high if a daily bounce is going to see follow through. And then from there, anything under 450 is just a daily lower high. So patient bears are saying, all right, finally, cool things off. Bounce, let's scout a daily lower high. And again, we're going to have a significant impact by tech sector earnings Tuesday. Tomorrow after hours, we get our first run of earnings. And again, I know it's Microsoft. I believe it's Google as well. It's something I just check every morning to stay on top of it. And that's going to impact, in my opinion, the magnitude of this bounce. If we get some bullish earnings reactions, the bounce on the daily is going to be more meaningful and get more follow through. And if we see bearish reactions, that bounce is going to top out real quick. So again, that's a bit of an unknown factor that's going to give us information after hours tomorrow. Hourly trend change for QQQ needed as well. And then we zoom out and we scout a daily lower high. QQQ was a stronger name today. If we look at QQQ divided by SPY, and again, this ratio chart shows me who's stronger, QQQ or SPY. It's QQQ. And as I've mentioned in the past, if we're going to see any meaningful market move, in my opinion, it needs to be led by tech, because that was the last significant bounce that we saw. Of course, the blue sky run was all tech leading. And then the bounce from the CVID lows was all tech leading. The bounce we recently saw for 3 weeks was all tech leading. So I'm recognizing a pattern where if we're going to see convincing big bull moves market wide, tech needs to be a part of that and ideally leading. And the fact that we did not see that on these previous little bounce attempts was a little red flag, a little point in favor of the bear column. So it's, again, something I'm keeping an eye on. Do we stay in a downtrend on QQQ divided by SPY, or does it see follow through? Because I have to see notable green here if I'm going to have any confidence in a market-wide bounce. So hourly trend change for QQQ needed. We're going to scout the daily lower high. SMH, again, nice bounce off the lows. Have to confirm an hourly trend change during regular trading hours. Then we zoom out, and anything under 253.27 is just a daily lower high. So what we need to see here is what we saw a little bit of last week to start the week. Okay, we got a big enough bounce. We can scout a potential trend change. And obviously the bulls failed to set that daily high or low. Thursday was a big red flag with a ton of bear volume and everything dropping at once. But we have to, it's the same thing. We're starting from scratch. Okay, can we put together a few days of bounce? And what I'm describing right now applies to all individual names and sectors that are in this setup of just a downtrend. Can we see a few names, a few days of bounce, can we hold the low and confirm a daily trend change? Without a daily trend change, the bulls don't prove a thing. The bears remain very confident. Tesla. So Tesla's been having some odd reactions to the Elon Musk and Twitter news. We'll look at Twitter in just a second. And odd in the sense that, we already have information that Musk is not going to be selling shares to fund this. He is putting shares up as collateral. But we did get a notable bearish reaction again today. This is the second one in recent memory where this drop occurred. That's a big drop. That's multiple percent real quick. And for me, I would think fundamentally, I guess people are looking at this and saying, oh, well, Elon Musk is going to be distracted from Tesla. But for me, man, if you own a huge social media platform, like that can only be bullish for your company, in my opinion, as far as perception or, things of that nature. But anyways, we're going to keep it simple and stick to the price because that's all that matters. And we now have a quadruple bottom at 973. This is the most important support level because if that level is lost, we confirm a weekly downtrend and monthly lower high is set for a tightening monthly range, which we could trade within for many months if that forms. If we hold 973, bulls keep control. So what we need to see from the bulls is a break of $1,009 to have follow through off of this support hold. That being said, anything under 1092 will just be a daily lower high. But for me, it is all about 973 and watching that level very closely this week. So Twitter reaction, bullish day as probabilities and news flow increased probabilities that a buyout was going to take place. We halted, the news came out, and we opened much lower than I thought we would. We double topped at the high of the day. I would have thought that the premium would have been, or I should say the discount would have been reduced now that it's official that the buyout is taking place. Granted, there's red tape to get through and the deal could still be thrown off. And that's why there is a discount. That's why we are not trading at 54.20 right now. But we're still 5% discounted. And once everything does go through, I guess time, opportunity cost, because if I hold Twitter shares, how long is it going to be until that money hits my account for 54.20 a share? That's a factor as well. But Twitter overall is definitely a bull. But we know we're not going to get very far one direction or the other from 54.20 unless we see headlines significantly shifting probability that this deal is going to go through. And with that, we had DWAC with a big drop today. And it has been all bears monthly. We have broken, look at the break of this support of 36.69. So what's your support level now? It's not officially black dirt breakdown, but essentially the same thing. Downtrend on all time frames. And again, the logic here is Elon Musk is going to open back up freedom of speech and Trump can come back if he wants. And so what's the point of having your own alternative service? Trump said, man, I'm not going back to Twitter. We'll see if he wants to win an election. It would be silly to not go back to Twitter. Anyways, DWAC will be scouting a daily lower high to be the result of the next bounce from here. Healthcare sector, solid green candle. Hourly trend change back to the bulls is still needed. Once we get it, we zoom out, and anything under 140.83 is a daily lower high. So tons of names are just scouting daily lower highs to be a result of this bounce, and what we will be using over the next couple of days are our fib retracement tools to gauge how significant is this bounce. Is it just a bear flag? Are we bouncing significantly enough to create space for a daily trend change? And bulls want to see 50% plus bounce retracement to create space for a daily trend change attempt. Tomorrow's important. Have to see a green day tomorrow for the market if the daily bounce is going to get any follow through whatsoever. Health, or I should say financial sector, broke to a new fear low only by 2 pennies, so we can call that a double bottom at our fear low. Hourly trend change back to the bulls needed. You know that routine. Most individual names and sectors don't have hourly trend changes confirmed yet. If we confirm it, we scout a daily lower high, anything under 38.32. So I know with how we are shaping up right now, if we see a higher open tomorrow, bears are scouting entries because we have not confirmed hourly trend changes, and we'll be looking for some gap fill if we see a gap up open. If we see a lower open, Bulls must defend the lows of today to set an hourly high or low. And again, this goes to all individual names, all individual sectors. If we open lower, we must hold the low and then break the high of today, which would confirm the hourly trend change. So that helps me know, depending on how we open, the direction that I will have a lean on tomorrow morning, which again is just step one of the process. Which direction, aggressive or conservative, which sector, which tickers. IWM, solid bounce. It was a bounce leader today as well. Fear lows are coming back into the picture. Double bottom in the 187s. We bounced off 189s. Hourly trend change back to the bulls will be needed. If we get it, we zoom out. We scout a daily lower high, anything under 204.80. What is the bounce retracement size is a question we're going to look to have answered in the next couple of days. Biotech sector stood out as a lead bull as well. It stood out Friday, dropping a lot less significantly than most sectors. And so now today, percentage-wise, it was a bounce leader. Hourly trend change, back to bulls needed. We don't have a convincing pivot there, just a quick little 30-minute high or low formed. And then anything under 86.22 is just a daily lower high. TLT is trying to get a bounce going. It's still a possible bear flag. EMA 12 resistance. We don't have strong closes. If we condense it to the 2-day time frame, you can see the bear flag more clearly. Still keeping an eye on it, as the weekly is still oversold. But lack of follow through at the moment. And the 10-year still holding on. Little double top, break a short-term support. We did lose the stair-step pattern. Weekly high or low every week for 6 weeks has now broken. But we're not going anywhere as far as a pullback unless we lose daily EMA 12, which has been holding for a month and a half. The dollar, all bull. It's all about 103. That is your many-year resistance level. 103 and 103.82 are both the highest levels seen in 20 years. So very key resistance approaching as we are getting extended, but no sign of weakness. Metal's still struggling to bounce. Gold is testing weekly support. If we break weekly support, we confirm a weekly downtrend and monthly consolidation will be underway. 4-hour RSI is still weak. It's cooling off a little bit as we trade sideways with inside bars. And the bulls are struggling to get over hourly EMA 12. Silver, a little bit of a stronger bounce. It dropped harder. It's trying to bounce. But again, look at the hourly EMA 12. We're not going anywhere unless we get over that. Much clearer bear break on silver. Weekly downtrend. Monthly consolidation is underway. It's a big 5-day setback for metals. No doubt about it. Very notable. Very notable shift. So with that, the miners got crushed as well. Yet again, second gap down open. Hourly trend change back to bulls needed here as well. And then we zoom out and scout a daily lower high to be the result of that bounce with tons of space for it to form. But again, bullish candles attempting to form on everything. We just need to see follow through tomorrow for daily bounces to be underway. Oil weakness today to start the week. Lower high, lower low. Weekly equilibrium continues to tighten up. We know volatility is coming to oil in May. Because this chart is 2 months in the making of tightening ranges after significant volatility, we will see this continue to tighten a bit. It will then break and volatility will return to oil. Natural gas daily bounce trying to get going, but we have to confirm a 4-hour trend change back to the bulls. So if we top out here, we'd be looking for an inverse head and shoulders attempt. Bears are patiently waiting for a daily lower high due to the size of this pullback. A lot of space for a lower high to be the result of the next bounce. So pretty much everything trying to get a daily bounce going. Follow through needed, whether it's a 4-hour trend change or an hourly trend change back to the bulls. If we get it, we know we're scouting daily lower highs all over the place. And patient bears are waiting for daily lower highs to be looking for entries. Tech sector earnings. We got a nice little bunny. It's a nature show out here. Tech sector earnings, Tuesday, Wednesday, Thursday, and then some more next week. But Tuesday, Wednesday, Thursday is definitely the highlight of tech earnings. And then we've got FOMC Wednesday. I will be pumping the brakes until we're through the FOMC and through this fundamentals gauntlet and sticking to a day trade mindset until then. I hope you're well, do good things, have a good Monday night. We'll see you tomorrow. You can see the green slowly work its way up to the higher elevations. This is the second year for this plum tree, and it's the first year it's showing fruit. Not many, just a few little green bumps. Probably can't even see them. Like the way it blows in the wind.